is that revenue actually real or not? You're handling someone else's money. You don't want to invest into a company and there might be fraud, or perhaps the revenue isn't what they say it is. We were engaged to do the due diligence for a relatively well-progressed startup that was in double-digit recurring revenue. The problem was that all of that revenue had been done on a cash basis. We were dealing with some pretty sophisticated investors at the time. They were international investors, and they were looking to deploy relatively quickly as well. We started to unpick the financials, and we quickly realized that they were a bit of a mess, and we essentially had to build it from the bottom up. A bit of a journey, but it paid its dividends for the investors because they knew exactly what they were getting into. Understanding the financial statements effectively, from the P&L, the balance sheet, to the cash flow, to understand, is that revenue actually real or not? What's the accounting basis for it? Have they been accounting on a cash basis or an accrual basis? Are there actually real customers there, for example, or potentially are they ghost customers? And so if you have high confidence that revenue figure in this case is accurate, then you have high confidence that you're paying the right price. And same for the startup as well. It goes on the flip side, that better reassurance that they're receiving the appropriate funds for their startup as well.